Welcome to the Ask Ralph podcast. We're listening to an experienced financial professional with over 30 years of experience can help you make sense of confusing questions, current headlines, and industry trends about taxes, small business, financial decision-making, investment strategies, and even the art of proper budgeting. Ask Ralph makes the complex simple by sharing his real-world knowledge from a Christian perspective with all things financial. Now here's your host, Ralph Estep Jr.
Tonight's show, we've got some great questions to answer, and I'm going to answer your questions as well. But here's a quick preview. Let's meet Sarah. She's a single mom walking a financial tightrope who said to me, "Every month feels like I'm barely hanging on. As a Christian, I want to be a good steward, but I can't seem to get ahead." I'm going to share some biblical wisdom and practical steps for single parents facing financial pressure. And then there's Marcus and his wife, who said he's doing everything right, but still feeling stuck. And he tells me, he says, we're tracking every penny, but between our mortgage, car payments, and daily expenses, we can't seem to build any real wealth. And I'm going to talk tonight about why discovering how tracking pennies isn't enough and the 3 major moves that could revolutionize your finances. And then there's Jennifer. She asked a question many Christian business owners wrestle with, and that is, how can I honor God while building financial security? I'm going to explore some biblical perspective on wealth creation and some practical ways to align profit with purpose. Plus, I'm going to break down Delaware's new Family Paid Leave Act and settle the debate between 401ks and real estate investing, and a couple of questions from my friend Mark about self-employment income and Social Security. I'm also going to answer your questions in the chat. Well, buckle up because we're going full throttle on the show tonight. Well, thank you for joining me. This is your weekly opportunity to get your questions answered. Feel free to ask questions in the chat. Do me a favor, just put a Q and a colon so I know the questions are seen. Feel free to comment throughout the show. And I want to remind you, there's just one more week left on the Ask Ralph Show survey. It's your opportunity to win a $250 Amazon gift card. And listen, it'll take less than 5 minutes. Again, that deadline is December the 10th, so you want to make sure you get your survey in right away. You can go and do that at askralphpodcast.com/survey. And stick around because later in the show, one lucky listener is going to win a $100 Amazon gift card. That's later in the show. Well, let's start tonight with our Bible verse. I always like to ground things in Scripture. And Jeff, I see, thank you for joining the show. Well, let's start off with Proverbs, and that's chapter 21, verse 20. And it's going to kind of play along with exactly what we're talking about on tonight's show. And it says this: the wise store up choice food and olive oil, but fools gulp theirs down. And think about it for a second. That verse perfectly captures what we're discussing tonight, and that's the difference between consuming everything we have and wisely building for the future. So let's jump right to our first question, and this question comes to us from Sarah. And Sarah writes this. She says, "Ralph, I'm a single mom with 2 kids, and every month feels like a financial tightrope walk. Last week, my car needed unexpected repairs, and I had to put groceries on my credit card. I feel ashamed because as a Christian, I want to be a good steward, but I can't seem to get ahead. How do I take those first steps towards stability without feeling overwhelmed?" Now, let me just tell you, Sarah, that is a tough situation. And you definitely are on that financial tightrope walk. And many parents, especially single parents, face that same challenge. So I want to tell you first, you are not alone in the struggle. This intersection of faith and finances can be especially complex for single parents. So let's break this down into some manageable steps. I'm just going to give you a few things. We're going to do a lot of questions tonight. The first thing I'm going to say to you, Sarah, is it's time to release the shame. Listen, financial hardship isn't a moral failing. It's just not. In the Bible, we see many faithful people who faced economic challenges. From Ruth gleaning fields to feed her family, to the widow who sought Elisa's help with debt. Don't live in this shame. Break away from that. Release that shame. Let's move on to number 2 option here, I think. And here's something you can do right away, Sarah. Start with small, achievable goals. Track every expense that you have for a week just to understand your patterns. If you listen to my daily show, I say this all the time. What gets measured gets done. So identify one small expense you could reduce, and maybe you start by setting aside $5 a week for an emergency fund. Number 3 thing I'm going to tell you to do is consider some practical actions. One of the things you can do, a lot of churches have benevolence funds or financial counseling. Maybe a great place to go and get some help. Look into local food banks and assistance programs. Another thing I'm going to tell you to do is review your bills and look for those unnecessary subscriptions. I don't know how many clients I've seen who have redundant subscriptions. I had a couple weeks ago, husband and wife were both paying for Netflix. They didn't even realize it. They could have been sharing an account. And last but not least, explore some additional income sources that work with your schedule. And then finally, my last idea for you is build some community support. Listen, this is an opportunity to connect with other single parents for resource sharing. Check to see if your church has childcare sharing options and look for a single parent support group. Those are all great things. And here I'm going to leave you one more piece of scripture, Sarah. The book of Philippians chapter 4:19 says this, "And my God will meet all of your needs according to the riches of his glory in Christ Jesus." Now, this doesn't mean immediate financial abundance, but it reminds us that seeking help is okay. Now, before we get on to the next question, I see that Jeff has asked a question, so let's pull it over here into the thing here that says, "Hey, Ralph, can you explain the BOI report business owners need to fill out this year? Can we do it ourselves or should we pay a QuickBooks $100 to do it for us?" Well, that is a great question, Jeff. Let's talk about that. So back at the beginning of the year, what this is the beneficial ownership information reporting. Basically, it means that the Department of Justice is collecting information on the owners of every entity in the United States. So whether you're an LLC, an S-Corp, a corporation, any of those things. You've got until January 1st of 2025. That's assuming that your entity was created before 2024. If it was created in 2024, you've only got 90 days. So you might have missed that mark. Listen, we're doing this for our clients. We're also charging $100 because it takes time. What you've got to do is you've got to log into the site and you've got to answer a bunch of questions. You're going to need to upload copies of your driver's license. You're going to have to do list all the people who are beneficial owners of the company. Is it rocket science? Absolutely not. You can figure it out. And it's not complicated, but it does take time. And that's why, like you said, QuickBooks is charging $100. We're charging $100 for that. But here's the key. Jeff, if you don't listen to anything else I say, get it done one way or another, because come January 1st, they can fine you thousands of dollars for not being registered. See, the whole point of this is they're trying to figure out who owns what companies so that they can say, well, this company is owned by this person. This company is owned by this person. And what's interesting, it's the Department of Justice who is in charge of this, not the IRS, not the Social Security Administration. So, Jeff, that is a great question. And like I said, it depends on your sophistication level. If you can take a picture of the front and back of your driver's license, if you know your EIN number, if you know your home address, I hope you know that, and if you know your business address, truth be told, you can really do it yourself. And I've had some clients who do it themselves, and I have other clients that said, Ralph, just take care of it for us. We don't want to be bothered with it. So, Jeff, that is a great question, and I thank you immensely for asking that. So let's move on to our second question. We got this question. This is the one from Marcus, and Marcus writes this. He says, Ralph, I've been following Dave Ramsey's advice, and I'm tracking every penny in my budget app, but I still feel stuck. My wife and I make decent money, but between our mortgage, car payments, and daily expenses, we can't seem to build any real wealth. We're tired of just existing. We want to start thriving. Marcus, let me tell you, I feel the stress, my friend. That is not a fun place to be. And I felt the same way at times. You feel stuck. It's not hard to feel stuck. But let me do this. Let me paint a different picture for you tonight. Instead of just tracking those pennies, because that can get you insanely crazy, imagine money as water flowing through your house. Just picture this, Will. It's money is water flowing through your house. What's going on right now is most of it's dripping away through various faucets. Those are things like your mortgage, your car payments, those daily expenses. The real question isn't about tracking those drips better. It's about redesigning the whole plumbing system. And here's what most people miss. Building wealth isn't primarily about saving. Listen to what I'm saying here. Building wealth isn't primarily about saving. It's about restructuring. Let's take a minute and talk about your car payments. That's not just a monthly expense. If you think about it, it's a wealth activity flowing away from you. Think about this for a second. A $500 monthly payment means you're choosing to be $6,000 poorer every year. That's just a fact. So here are 3 practical moves to consider. Marcus, I always want to give you things to do because good intentions are great, but they don't get you anywhere. So let's talk about some things you can do. Number 1 thing, I'm going to encourage you to do this. Attack the big 3. That's housing, transportation, and insurance. Because think about it. These typically eat up 70% of most people's budgets. Maybe you could consider a house hack by renting out a room in your home. It might bring some extra income in. Just be careful who you rent it to. Maybe you replace one car with a reliable used vehicle. So that's the first thing. Attack those 3 big things: housing, transportation, and insurance. Because truthfully, if you look at most people's budgets, that's 70% of their budgets. The second thing, and you're not going to hear this on every show, a lot of people talk about expenses and saving nickels and eating beans and rice and all that stuff. I'm going to take a completely different approach. I want to focus on income growth. See, most people obsess over saving $5 on coffee while ignoring the potential $10,000 raise they could get at work. Ask yourself, what skills could you develop to increase your earnings power by 20% this year? Take the time to invest in yourself, grow your job, get that raise, build that income side. Even listen, when I talk to clients, a lot of business clients come in, they're saying to Ralph, how's my business doing? I look at the expense side some, but most of the time I look at the revenue side. You can do the same thing in your personal finances. Figure out ways to grow your income, and then you don't have to stress so much about the $5 coffees and the nickels and dimes here. Another thing I'm going to encourage you to do, number 3 on my list here, Marcus, is build assets that pay you. Think about this. Every dollar that you have should either protect your future or build your wealth. Maybe it's time to start that small side business. I have a ton of clients who started small businesses. It's not going to be this million dollar making thing, but it may bring enough income in to really help you get through those tough times. And then you maybe talk to a broker and do some dividend paying stocks. So Marcus, I hope that really answers your question. So let's move on to question number 3. And question number 3 comes from Jennifer. Jennifer writes this one. This is in this week's mailbag. Jennifer says, as a Christian business owner of a small retail shop, I struggle daily with balancing profit making and biblical principles. My business is growing, but I feel guilty about wanting to build wealth. How can I honor God while building financial security? Now listen, Jennifer, this question touches on something that I talk about all the time in the show, and that's that faith and commerce connections. And you'd be shocked how many business owners wrestle with this. It's tough. Like you think about it, you say, well, does God really want me to be prosperous? Does God really want me to make all this money? And my answer is yes, but here's the thing you got to do. So I'm going to propose to you what I call a balanced perspective. The Bible doesn't condemn wealth creation. It doesn't. Numerous faithful figures like Abraham, Job, Lydia were successful business people. Here's the key. The key lies in how wealth is acquired and used. That is really the thing. So Jennifer, listen to what I'm saying to you. It's not about building wealth. It's about how that wealth is acquired and used. So consider these practical approaches. Here's what I'm going to encourage you to do. If you're feeling that way, if you're feeling guilty, look at your business practices. Ask yourself some questions. Do you pay fair wages and treat employees with dignity? That's a question you can answer. Are you honest in all your transactions and pricing? I'll tell you a crazy story. I had a client in a month or 2 ago, and he was telling me, Ralph, I just don't understand why my business isn't thriving. And I looked him in the eyes and I said, but I know how you do business. You rip people off. Why do you think that God is going to honor that? So be honest in your transactions. Be honest in your pricings. And maintain transparency with your customers. Listen, your customers will expect that you're going to make a profit. That's what feeds your family. That's what keeps the lights on in your business. But you can maintain transparency with them. And here's a big deal. Honor commitments to your suppliers and partners. If you're doing business with somebody, make sure you pay them. See, this is all the things that I'm talking about. Let's move on to the next thing, and that's financial stewardship. So Jennifer, you're wondering about, should I build that profit? Should I grow the business? And here's the thing you got to do. You've got to view those profits as a tool for both sustainability and service. And listen, this is one of the ways that you can set aside that wealth that you're growing for charitable giving. I say this on the show all the time. You are never going to bless anyone else until you get your own financial house in order. So if you're seeing wealth, if God is giving that to you, it's going to open doors to charitable giving. And it could create some employment opportunities in your community. Maybe you can do some investment in your employees' well-being. Give it back to your employees. And let's look at the final thing, and that's that wealth perspective. And here's the truth. A lot of people don't want to talk about this in the secular world. You got to remember, you got to consider yourself a steward of what you have rather than an owner of it. We don't have anything. God gives us things. He loans us things with the idea that we're going to steward them, that we're going to take care of them. We're going to honor him. So use that and focus on creating value for others through your business. Use that growing success to increase the positive impact to the community and at all costs. Listen, if you hear nothing else I say, Jennifer, maintain humility and maintain gratitude. And listen, I'm going to share something with you. Many Christian business owners find peace by establishing clear ethical guidelines, practicing regular giving, and viewing their business as a ministry opportunity. This is why I do what I do. I am treated very well. God has richly blessed me. And last November, when I decided to relaunch this daily podcast, my goal at that point was this was going to be a ministry for me. And it's an opportunity to show people how to get ahead. You can do the same thing with your business. Do it with excellent service and ethical leadership. So I know, Jennifer, I gave you a lot to consider, but I really think that you got to focus on the positives of what you can do as you grow that wealth. Now, let's take a look here at question number 4. All right, question number 4 comes from somebody here local to me. It comes from Amy in Middletown, Delaware. And she says this, she says, what are the details about the Family Paid Leave Act in Delaware? Now, I've got listeners all over the world, but I'm going to focus on this for just a few minutes because a lot of states are doing this as well. Now, Delaware has this thing called a Paid Family and Medical Leave Insurance Program. You might hear it called the PFML. Now, it's going to go into effect January 1st of 2025. So I want to just take a couple minutes and share with you the details. Now, listen, if you're not in Delaware, there are many other states who are doing this. So check with your local state and see if they're doing it as well. But in Delaware, this is what it looks like. So the benefits for your employees, it can give up to 12 weeks of paid leave. That's annually. And that's the maximum combined total for all types of leave. Basically, what it works out to is up to 80% of the average weekly wages capped at $900 per week. So if you're, when we're going to talk about this in a second, if your business is covered by this, then your employees can basically get $900 a week for up to 12 weeks of paid leave annually. And that includes things like parental leave, like if you have a birth, if you have an adoption, if you have a child in foster care. It also brings along this medical leave for serious health conditions, or maybe you're caring for a family member that needs that, and there's also some military deployment-related leave. Now, here's what it looks like from eligibility. Employees must work at least 1,250 hours in the past 12 months, and that now here's the thing. Amy, this is what you need to understand, because a lot of my clients and a lot of people who listen to the show are small business people. In Delaware, it applies to employers with 10 or more employees for parental leave, and it applies to employers with 25 or more employees for other leave types, and all state employees are covered. So generally, quick general thing here is if you don't have more than 10 employees, this isn't going to affect you. Now, if you do, then here's what it's going to look like. Basically, the way that it is funded, it's a joint contribution from employers and employees. The total premium is 0.8% of their wages, and that cost is split 0.4% for the employer and 0.4% for the employee. So it's really a win-win. But like I said, it's only mandated in Delaware, I'm talking about now, for those who have 10 or more employees. So Amy, I hope I've given you the answer to the question you're looking for. Now let's move on to question number 5. Like I said, we are nailing some questions tonight. Now this one came to us from Anthony, and Anthony wrote this. He said, "Hey Ralph, if you're able to cover this topic on a future episode, it would be great. I'd like to know your perspective on utilizing 401k funds for real estate investments. Seems to be a topic that many folks are split on. Positives of long-term real estate holdings would be the monthly cash flow, appreciation to the property, generally 3 to 5% per year. Tax advantages in some capacity and not being taxed at an expected higher rate down the road compared to withdrawing funds from the 401k during retirement. Now, on the other side of the fence, this is what Anthony says. He said, I've heard different talk shows deep dive into the advantages of 401k primarily due to the company match, which he calls free money. And I agree with that, Anthony. We'll come back to that in a second. And market increase expectation over time. So you might be wondering, what is Anthony talking about? Here's what Anthony is really talking about. He's asking a very subtle but simple question. And what he is saying is, he's saying, Ralph, am I better off to invest money in my 401k, or should I go buy investment properties like real estate investing? So that's really what I'm going to answer. I'm going to break it down in a way that helps everyone make smarter decisions with their money. Here's the first thing I'm going to say. Picture this. I said this on the show the other day. You're walking down the sidewalk, just having a nice afternoon stroll. You look down on the sidewalk and there's a $100 bill laying on the sidewalk. The question I have for you is, do you bend over and pick it up, or do you just keep walking? Well, think about it in this term. If your employer offers a 401k match, that means if you put money in, they match it. That's an immediate 50 to 100% return on your investment. And that's something you're not going to find anywhere else. So at a minimum, Anthony, here's my answer to you. At a minimum, bend over and pick up that $100 bill. Contribute enough to get the full match. Now let's talk a little bit about real estate versus traditional retirement accounts. But like I said, I'm starting off with, if you got a match, do the match first. Now here are the advantages to the 401k. It's an immediate tax deduction. So as soon as you put that money, it gets deferred from your paycheck. It's an immediate tax deduction. It reduces your federal taxable income. And a lot of people don't think about this. But let's just say you're in the 24% federal tax bracket, and let's say you're in Delaware and you're paying 6% state. Well, when you make that 401k deduction from your paycheck, you're getting a 30% return on your investment day one. I don't know another investment that does it that quickly. So that is huge. Here's the next thing. All of that money grows tax deferred in your 401k plan. You're not paying taxes on it like dividends or anything else. It's deferred. Like I said, we mentioned that employer matching. There's usually low maintenance. You basically talk to your HR people. They set it and forget it. It's professionally managed. There's high liquidity. You can cash out if you want. And there's a really not a lot of initial capital needed. I mean, you could put as little as $2 into the thing if you wanted to. Now, some employers might have, some basic things, but this is something to consider. Now, let's talk about the real estate advantages. So we're going to flip the script a little bit. As you said, Anthony, with real estate, yes, you might get that monthly cash flow. And like you said, that's true. Property may appreciate in value. Right now, I am not a huge fan, especially in the market that I'm in up here, of buying real estate because I think things are just overpriced right now. It is definitely a seller's market. That may change here soon. I hope things don't happen like I expect they're going to happen. But right now, I think to get that appreciation, Anthony, that you're talking about, that 3 to 5% appreciation, I think we're waiting a little bit on that. So I would maybe wait till you get a little bit farther into that. Another great thing about the real estate advantage is if you have those tax deductions, yes, you can deduct the mortgage interest. You can deduct the depreciation, the repairs and maintenance. So that's an inflation hedge. And truthfully, yes, you're right, Anthony. You've got more control over that investment because it's right there in front of you. And you can leverage that and buy other properties. So all of those things are definitely advantages. Now, there are a ton of caveats to that. Depending upon your income, you might not be able to take rental losses. So that's something you want to talk to somebody like me or a local tax person, an accountant that's in your area, and ask them about that. But here's my take. Anthony, you wanted me to give you an answer. So here's my answer. I'm going to start by saying it isn't either or situation. It's just not. It's not an either or situation. Because if you're really smart, you can do both. And like I said, first thing you want to do is pick up that $100 bill off the sidewalk. So start with your company's 401k match. If they're matching, you should go up to the match. Once you've done that, then consider real estate as part of your broader portfolio diversification strategy. And remember this though, a lot of people don't have the stomach for this. And I deal with a lot of clients that have real estate. Real estate requires hands-on management. It's not like an investment that you do in your 401k. It's not like an investment that you park with your broker and the broker calls you occasionally and says, hey, Ralph, this is doing this and this is doing that. It is a hands-on thing because this is a thing. And people will move out on you in the middle of the night. People won't take care of it like you take care of it. There's all kinds of issues. And think about this also, Anthony. There is a big upfront capital outlay. You want to buy that house, you got to figure out how you're going to pay for it. Now, you can get a mortgage, you can do all kinds of things like that, but you've got to lay out that capital at the front end. And like Craig's here, AI goes to college, it says a big downside of some real estate investments are the unexpected expenses. And that is just the absolute truth. And a lot of clients get burned on that. So I always say, and thank you, AI goes to college. Thank you, Craig, because that's the truth. A lot of people don't understand what they're getting into. And they think, oh, my dad was one. He would always say, they're not making any more property, Ralph, so go buy some rental properties. Well, I think you've got to have the stomach for that. You've really got to understand what you're getting into. So again, Anthony, I hope I've answered your question. I know there's a lot to cover there. Well, let's move on to, I got two questions from Mark. I see Mark's in the chat room. Mark has got a great podcast. It's called Practical Prepping. You can find that at practicalprepping.info. And I'm going to plug something. Mark just released an online course, and I'm one of the first people to get it, and it is fantastic. So I'm going to encourage you to go to that practicalprepping.info and check out his online course. But Mark sent me two questions. So let's start with Mark's first question. And Mark said this. He said, how much of my side gig income should I set aside to cover self-employment if I'm not filing quarterly? Well, Mark, you're not going to want to hear this, my friend, but I'm going to tell you it anyway. The IRS expects you to pay as you earn. It sounds good that you can pay on April 15th, but that's not what the IRS is expecting you to do. They're expecting you to pay as you go. Just like when you work a regular job, your employer handles this through your withholding. You get that paycheck every Friday or every other Friday or once a month. Your employer is matching your wages or matching your labor to when they're sending in those tax payments. Well, the IRS wants you to do the same thing if you're doing self-employment. But with self-employment income, this is all on you. So Mark, I'm going to answer your question with a little bit of a hedge. Here's what I'm going to tell you. Here's what you definitely need to set aside. The first thing you want to consider is self-employment tax. Now, when you work for somebody else, that's that Social Security and Medicare, you pay half and they pay half. Well, when you work for yourself, guess what? You pay the whole halves. You pay both halves. So that's 12.4% for Social Security, and that's up to that wage-based limit. I just recorded a show the other day about the upcoming changes for Social Security for 2025, and I talk about some of the changes that are going on there. But right now, that number is about $160,000. So you're going to pay that 12.4% until you reach that $167,000, and then you're also paying Medicare, which is 2.9%, and that one has no income limit. And listen, this is not negotiable. You can't call the IRS and say, listen, guys, I'd really like to not pay both sides of this. Too bad. You're self-employed. You're paying both sides. So that's the self-employment tax, 15.3%. Now, Mark, you also have to consider income tax. Now, this is where I'm going to say it depends. And the reason it depends on what your tax bracket is. If you're already employed, what you should do is calculate based on your marginal tax rate. You're probably thinking, Ralph, what does that mean? Marginal tax rate basically means that, let me back up a step. So the tax system in the United States is a progressive tax. So you pay tax on income, and that tax rate goes up as your income goes up, but not all of that income is taxed at that highest rate. That highest rate is what we call the marginal rate. Let me give you a real simple example. Let's say that you're in the 12% tax rate. You make up to, let's just throw a number out there, $30,000. So your first $10,000 of income is basically taxed at zero. Then your next 20 to get to 30 is taxed at 12%. And then once you go over 30, that next batch of income or that next segment of income is taxed at 24%. So that would be your marginal rate. So what I'm saying here is if you've got that W-2 job or you've got investments or you've got pension income, if you've got Social Security, that's a little bit complicated, but you're going to be paying tax at what I call the marginal rate. So here's what I'm going to tell you to do. Assume that your marginal rate is 24%, add 5 to 10% just to be a buffer. Now, last thing, you don't want to forget this either, and that's state and local taxes. A lot of people miss this part. They think, Okay, Ralph, I've got to put 15% aside for Social Security tax. I got to put another 24% aside for federal taxes. And Ralph said to add a little buffer, so I'm just going to make it 30%. So now I'm at 45%. But then don't forget about those local taxes and state taxes. And listen, it depends on where you live. Some states like Tennessee have no state income tax. Florida has no state income tax. Some places have state income tax, local income tax, city income tax. That can be anywhere. There are places in Tennessee, even though they don't have a state income tax, that have a local tax that's as high as 13%. So check your local tax rates. Now, Mark, I've thrown a ton of things at you, but here's what I'm going to tell you. At an absolute minimum, take 25% of whatever your gross income is from your side gig. 25%. If you want to be conservative, make that 30 to 35%. And if you've got income over about $50,000 or $60,000 as a couple, or about $50,000 individually, you better make that 40%. That's what I generally tell clients. I say, look, if you've got a self-employment job, set aside 40%. Now, let me talk about some warning signs that you might not be saving enough. Here's the thing, some things to think about. If your side gig makes over $1,000 per quarter, you're probably not paying in enough. If you owe more than $1,000 in taxes for the year, you're probably not putting in enough. And if your withholding from other jobs doesn't cover the additional income, you probably have a problem. So one of the things that a lot of my clients do, if they've got that side business, they might change their withholding on their main job to a higher amount so it covers that. Because listen, when we file a tax return, truth be told, the IRS doesn't care what bucket it comes from. They just want their bucket. So here's some smart practices, Mark. I'm going to throw some things at you can do right away. Open up a separate savings account just for taxes and take that 40% and put it in that savings account. And here's another thing I'm going to encourage you to do. Transfer that tax percentage immediately when you get paid. So if you've got a contract, let's say you did a job and you're getting, let's say you're a contractor and you did a job and you get paid for that. As you deposit that money in your business checking account or your checking account, take that 40% and put it in that savings account. But here's the deal. When you go to get your taxes done, you might get some of that back, but then it's found money. The next thing you want to do, this is absolutely critical because I've been talking about gross income, but you don't pay taxes on your gross income, you pay it on the net income. So this is where you want to keep detailed records of your income and expenses, because if you come to somebody like me, you bring me a shoebox, I'm not going to be happy with you. You're not going to be happy with it either because I'm going to charge you a lot. So keep track of your income, keep track of your expenses. And this is not rocket science. You're coming to me, here's what I want to know. Mark, how much did you make in income? What was the money that was deposited into your bank account for sales? And then I want you to tell me your expenses. And it doesn't have to be complicated. What did you spend on this? So just categorize those things. And last but not least, save receipts for business-related deductions, because you don't want that little knock at the door from the IRS that says, hey, Mark, guess what? It's your friends from the IRS and we're here to audit you. Keep receipts, keep detailed records. And I'm just going to say one more thing, Mark. Not filing quarterly can result in penalties. That's why if you go to an accountant, they might give you these little nasty things called quarterly estimated tax payments. That's because the IRS will charge you a penalty if you don't pay as you go, or if you have that underpayment at the end of the year. And I'm going to call it an interest charge because it's exactly what it has. Now, I've got some clients, they don't care. They're like, Ralph, the IRS can stick it. I'll pay them when I want to pay them, but just be prepared that you may get hit with a penalty. If you want to avoid those penalties, you can make quarterly estimated tax payments, or like I said, increase your withholding on your other job to cover that. And listen, last but not least, Mark, on this question, consider working with a tax professional, especially in your first year of significant side income. I'm going to tell you right now, the cost of service is tax deductible, and by working with somebody like me, you could save money in the long run. This is not the place for that DIY, do-it-yourself project. So hopefully, Mark, I've answered your question. And Mark, I'm going to move on to your next question. That's question number 7 here tonight. And this is a great question, Mark. No one's ever asked me this, so I actually had to do some digging and prepare for tonight's show. I'm glad you sent it over ahead of time, or you might have stumped me on the live show. And this is what Mark asked. He said, will paying taxes and Social Security on part-time jobs, or self-employment tax on small business income ever increase the Social Security I already receive? Wow, that's a great question, Mark. So I came up with an explanation. So here's the good news. The good news is there's nothing you need to do. From what I understand, I've done some research on this afternoon. Social Security, the administration will automatically review your earnings record annually. Those new earnings will be reported, like, let's say you went out and got a W-2 job, that would be added. Or maybe when you file that tax return and you pay that self-employment tax, that would be put into that as well. And what they tell me is recalculations happen automatically each year, and any increases appear in December payments for the following year. But here's what I'm going to encourage you to do. You can double check their math. How do you do that? You review your earnings record online. So if you don't have an account, go to ssa.gov and create an account and go see what they have for your earnings. And then what you want to do is verify those recent earnings appearing correctly. Make sure they're there. And if you find that they missed, gather the proof of that and call the Social Security Administration, or you can file online with them. I'll give you the number for Social Security if you want to wait on hold. I think online's better, but the number is 800-772-1213. Again, the Social Security Administration number, go to ssa.gov and get an account. But if you're old school and you want to call, go to 800-772-1213. And then you also can schedule an appointment with your local office. Now, here's the thing. For self-employment, this is what you're really asking about. Mark, earnings are recorded after you file your tax return, and it may take a while for them to appear. So keep good records of those net earnings. So the answer to your question, Mark, big picture, is that usually, this is what you're going to look for, usually current year earnings show up by September of the next year. So if you're filing your tax return for 2024 and you've got substantial self-employment income, don't expect to see that on your record until 2025 September. And then if there's going to be an increase, that's going to start with your December payment. And that first increase arrives in January. Now, here's the downside, Mark. I don't think this is what you wanted to hear. But if you've already had all of those high earnings years, it's really not going to make an impact. So that's just the bottom line. So let's move on to the next question. I see we've got a question here in the chat. And let me see what we got here. This one coming from AI Goes to College. It says, the self-employment tax should count towards your number of quarters, assuming it's substantial income, right? Yes, correct. That is absolutely right. That's exactly what they say in their documentation. So if that self-employment income is a greater amount than one of the other quarters, or one of the things they mentioned in their documentation was, let's say that you didn't have all of the quarters so that you were penalized and your benefits were a little less. What they tell me is that these self-employment income dollars should add to that. So that's one of the things I'm going to encourage you to do. So check that out. Great question. I appreciate you sending that question over. So let's take a look here. Let me see if I see any more questions here in the chat. I'm going to grab a quick drink here because I've been talking for about 41 minutes straight. And, sometimes I just need to take a break there. And if you got a question, feel free to post it right there in the chat. I'm happy to answer it. We're going to launch our giveaway tonight. But before we get to that, I'm going to ask you this question. It's almost Christmas time. A lot of people this time of year is stressful for them. So let me ask you this. Are you losing sleep wondering how you're going to afford everything on your holiday list? Are you tired of starting every new year buried under a mountain of holiday debt? Do you want to create magical Christmas memories without the financial stress that usually comes with them? I've got a guide for you. I'm going to give you some peace of mind. I wrote a guide. It's called Surviving the Holidays Without Going Broke. And hey, we all want to do that. And in that guide, I'm going to give you a proven budget system that actually works. If you follow it, it will help you. I'm going to share some smart shopping strategies to slash your costs. I'm going to show you ways to create magical memories without maxing out those credit cards, because here's the dirty little truth. Nobody remembers what you bought them. It's all about those memories. It's those experiences. Also, part of the guide, I'm going to help you teach your kids and grandkids some gratitude. And I say, gratitude in this gimme more world. And the central component of this is how to keep your faith and family at the center of your celebration, because that's really what we're celebrating. So here's what I say. Don't let January's credit card bill steal your holiday joy. Download your free guide. It's real simple to get it. you go to askralphpodcast.com/Christmas. And listen, make this your most meaningful and, dare I say, affordable holiday season yet. Your stress-free holiday season starts here. Again, that's at askralphpodcast.com/drawing. Now, what everybody's been waiting for, this is the $100 gift card giveaway. Let me get to this. Let me make sure I can get this to work. The first week, we struggled. Ralph struggled, I should say. That's a better way to say it. So let's go ahead and hit start here. All right, cool. So now what you're going to do, if you're interested in entering the contest, all you've got to do is go into the chat and type in #Ask Ralph. Once you do that, you should see that your name should appear in the little box on the screen. And while we're doing that, if anybody has any other questions, you can go ahead and ask them if you want. So it doesn't look like anybody yet has typed in #Ask Ralph. If you don't type it in, you can't win the Amazon gift card. So I'm going to encourage you to type it in. Just type in #AskRalph, and then we'll get started with this contest. So I want you to do that because this is what I'm trying to do. Mark, I appreciate what you said. Let me see what Mark put this over here. Here we go. Somebody's entered. So now the clock ticking starts. So Mark just made a comment, and Mark says, great answers. In the past, my W income covered enough of the self-employment tax, but no longer that. You no longer have that W-2. That's exactly right, Mark. That's the whole point, exactly what I'm saying. Now, if you type it in, make sure you type in #Ask Ralph with no space. So it's got to be exactly #Ask Ralph. So you're absolutely right, Mark. And that's what happens. A lot of people, they have that W-2, and maybe they have that side business. And that's cool. But like you said, then what happens is when you don't have that side business anymore, you come in to see somebody like me, and all of a sudden it's like Shazam, you get whaled by the tax man. You don't know how many people, Mark, I've had that have dealt with that. It is really difficult. Again, put in #Ask Ralph. Don't put in any space, just #AskRalph. And you should see your picture or your icon pop up. Looks like we've got 5 people entered in there so far. So the good news is the technology is working. I'm learning how to use this technology, which is great. And like I said, again, we're going to be doing this every week. If we get more viewers to come on, here's my commitment to you. For every additional 10 viewers, I'm going to add another $25 to the gift card. So if we get 20 viewers, we'll go up to $125. Listen, my whole goal here is to help people grow their finances and grow their faith at the same time. Because listen, not everybody has the answers. I've been blessed to be given some knowledge. I've been blessed to deal with people who have gone through these things that all of us face. All of us face these things. We all fall short. We all make mistakes. So that's why I really appreciate your questions. And Mark, thank you for the comment, because that is absolutely correct. That is absolutely correct. And I just want to thank everybody who turned out tonight. And I encourage you, come each week if you can make it. I'm here to answer your questions. You're not going to get a bill from me. In fact, if you win the gift card, I know the lady who won last week, she was ecstatic. She happened to be a person who goes to our church. She came up to me at church. She goes, Ralph, I was so excited. She said, I never win anything. So she was just flabbergasted and happy. And that made me feel good too, because listen, God has richly blessed me. And my goal, like I said, my mission field is to help people grow their finances and grow in their faith, because the two things really do go hand in hand. So anybody else have any questions here as this countdown goes? We got another 2.5 minutes. If anybody else is in the room, there are people that are in the room that haven't signed up for the giveaway. I'm encourage you to do that. Just go #AskRalph. And then once this is done, I'll get your email address and you will get a $100 Amazon gift card if you're the lucky winner tonight. So don't forget to enter. Like I said, there's more people in the chat room that haven't entered. So make sure you've entered. It looks like Jeff has entered. Mark has entered. Let's see. Salty Waters has entered. AI Goes to College has entered. Pokemon Guy 3309 has entered. I like the Dallas Cowboys thing. I'm a Dallas Cowboy fan as well. I'm betting Jeff might be as well. I know Jeff is down in that area too. So, and thank you, Craig. I appreciate what you said there. Is great advice as always. Advice here is free, Craig. I appreciate your comment though. That's really good to hear. When you do podcasting, and there's a couple of other podcasters in the room here today. I didn't start this live show till about 7 or 8 weeks ago. And it's so cool because you get feedback. Every day when I record my podcast, and if you didn't know that I do a daily show, and you can get that by going to askralph.com. Hey, there we go. Somebody else has just joined the contest here. But, when you do your normal podcast, you don't do it live, you're just talking into a camera, you're talking into a microphone, and you don't get that feedback. And it's really cool in a live show. We get feedback. We get to have that community. So I'm going to encourage you, continue to come out on Tuesday nights. If you know somebody that could benefit from that, if they've got financial or faith questions, the two things match together, encourage them. It's real simple. Just go to askralph.com/live. And you see what we do. We answer questions. We got some questions that were sent in, and I appreciate everybody that did that. We get questions that are asked in the chat. Okay, we got 38 seconds left, and then this thing is going to give somebody a $100 gift card. So if you haven't entered so far, I really appreciate it. And Jeff, I thank you for your comment there. That is really feels good to me, Jeff, for you to say that. So, and I want to thank Jeff too. Jeff really helped me with the technology that goes behind this. He helped me put these slides together, and I know I'm probably not looking into the camera all the time, Jeff, but trying to run the stream deck and run the camera and run the contest and watch everybody's comments is fun. So, but thank you, Jeff. I truly do appreciate that. Okay, looks like we've got about 5, 4, 3, 2, 1. Okay, now the magic of the app is going to shuffle these things together, and it's going to automatically give us a winner here in a second. There we go. Let's see who the winner is tonight. It's doing the magic of selecting. Let's see who the big winner is tonight. All right, it's doing it. Let's see. And the winner is Mark Lawley. Fantastic, Mark. You've won the $100 Amazon gift card. So, Mark, again, thank you for tuning in tonight. And I'm sure that'll go a little bit ways to getting a little extra money for the Christmas season. So, and Jeff, I agree with you. I'm over the place on my live show. I hear that, brother. All right, well, let me just say a couple more things. Like I said, if you have questions and you didn't have a chance to get them answered tonight, you can go to justaskralph.com, submit your questions. I would really appreciate it. And listen, I'm going to ask you for one more favor before we close out tonight. I'm really trying to grow the show because I want to reach more people. One of the best ways you can do that is you can share the show with others who will benefit from the information I present. Like I said, I do this every day, and it's real simple. Here's a simple way to do it. Just send them an email with a link, send them askralph.com and tell them, listen, I listened to this crazy guy, Ralph. He's lost his mind. He talks all over the place. No, I'm just kidding. But just tell him, listen, this show has helped me. Maybe it's given you some ideas. Maybe it's given you some faith. Maybe it's given you some feeling like you're not alone on this journey. Because here's the thing about podcasting. Here's the thing about YouTube and shows and Rumble and all that stuff. Word of mouth is the key. And if you can share this with your friends and family, I know we can grow this and we'll see even more people. So thank you for joining me today. Again, every Tuesday evening at 7 p.m. Eastern Time, share the show with friends. And here's what I want to leave you with. As I always end my show, my passion is to help you achieve financial success. That's why I do what I do. That's why I turn on this microphone. I turn on this camera. I plan these episodes out because I want to see you achieve financial success. I want to see you live out your dreams and at the same time grow in your faith. And I know working together, when you join the show, when you subscribe to the show, we can master your finances from that Christian perspective. So as always on the show, I want to say this: stay financially savvy out there, and may God bless you abundantly. Again, thanks for joining me tonight. I truly do appreciate it.
Thank you for joining us on the Ask Ralph podcast. And with a simple click to subscribe, we'll invite you back to our next episode. And remember, financial issues don't have to be complicated. Just ask Ralph. The information contained in this episode of Ask Ralph is based on data available as of the date of its release. Saggio Accounting Plus and Ask Ralph Media, Inc. is under no obligation to update this content if changes occur. Applying this information to your specific situation requires careful consideration of all facts and circumstances, and any information provided is not to be considered as financial, tax, or legal advice. Please consult your tax advisor or attorney before acting on any material covered.